Good evening and welcome to the City of Adrian City Commission meeting for December 1st, 2025. I call this meeting to order. Please stand for a moment of silence and the Pledge of Allegiance.
Pledge allegiance to the flag of the United States and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Roll call, please.
Mayor Heath, Commissioner Roberts,
Present.
Commissioner Zeik,
Present.
Commissioner Binky,
Present.
Commissioner Moore,
Present.
Commissioner Schwartz,
Present.
Commissioner Chesser.
Present.
All commission members present with the exception of Mayor Heath.
At this time, I'll entertain a motion to excuse Mayor Heath from tonight's meeting.
So moved. Second.
Do I have to say their names? I don't remember. Yes.
Normally she does, yes.
I have a motion from Commissioner Schwartz with a second from, Commissioner Cheshire. Roll call, please.
Commissioner Moore,
Yes.
Commissioner Schwartz,
Yes.
Commissioner Chesser,
Yes.
Commissioner Roberts.
Yes.
Commissioner Zeik. Yes. Commissioner Binky.
Yes.
Can I have a motion to approve tonight's agenda?
So moved.
Second.
I have a motion from Commissioner Benke with a second from Commissioner Zeik. Roll call, please.
Commissioner Roberts,
Yes.
Commissioner Zeik,
Yes.
Commissioner Binky,
Yes.
Commissioner Moore,
Yes.
Commissioner Schwartz,
Yes.
Commissioner Chesser.
Yes.
Motion carried.
At this time, we will have public comment regarding items on the agenda. It will be a 3-minute public comment, and just for the record, please state your residency. And remember that the commission will not be replying to you at this time. We may discuss with you after the meeting if you have concerns. We will begin for the 3 minutes inside the chambers. Seeing no in-chamber comment, is there any comment online? Hearing no comment, we will move on from public comment. Tonight, we have the honor of doing presentations for the fire department, new badges. Would Chief Eric Massengill come forward, please?
Good evening. We're here tonight to present badges. I know some of you are new and haven't had this experience before, but it's tradition in the fire service that once the firefighters finish their probationary period, which for us is a year, that we bring them up and have their families pin their badge on. So it's just a tradition that we have. So we have 3 to present tonight who are new members, and they all 3 successfully passed their probationary period. So first we have Carrie Keith. Come up, Carrie. So Carrie came to us. He was a firefighter in Addison. Before that, he worked in Inkster as a firefighter and a paramedic. So he came to us with a lot of experience, and his father actually is retired sergeant from Clinton Police Department. But Carrie chose the better career, we feel. So So yeah, so he has a lot of years of being a firefighter and a paramedic, and we're happy to have that experience to take advantage of that and have him here in Adrian. So his family's here to present his badge. You get him bottom. Okay. All right, that's good. Good job, buddy. Congratulations. Thank you. All right, second up, Timothy Schishler. So he actually came to us from Morenci Fire Department, spent a couple years there, along with his dad, his uncle, his grandpa, possibly some other ones that I may or may not know, that served as firefighters. He's in his paramedic program right now, finishing up. I'm sure he's gonna be glad when that's over. Yeah, so he came with us with a lot of experience, and we're happy to have him here. And his sister is here somewhere. There she is, gonna pin his badge on. All the pressure. All right, and Kirsten Pennington is our next and final. She actually has what I would consider the most unique journey to us as a firefighter. She was actually a firefighter in Houston, Texas, went through their academy, worked there for a little while, and then moved back to Michigan with her family. So I believe your aunt is a firefighter in Houston, chief in Houston, and kind of spurred her into joining the career and told her how great it is. So we're really fortunate she chose Adrian to live and to work, and her family's here with her tonight to present her with her badge. All right. Thank you for your time tonight.
Thank you, and thank you for your service. We do appreciate you working for the city of Adrian and all of your accomplishments. All right, we are going to move on to informational discussion topics. So I'm going to turn it over to our city administrator, Baugh, for a discussion on our audit presentation.
Thank you, everyone. And I'd like to introduce Finance Director Nathan Owens and his team that we put together, if they would like to approach and begin their presentation. A goal here is to provide good information for our citizens to understand the city's budget. I just want to clarify, this is different than the forensic audit that we're doing on the enhancement grant. This is specifically for the city's finances. So if you would, come to the podium.
Hello, my name is Amr Laskari. I work with Clark Schaefer Hackett, and we audited the cities this year. We only focus on auditing cities and counties. I also let my colleague here.
Hi there, Cody Mitchell. I'm the manager on the job.
All right, so if you guys have the PowerPoint, first slide, we issued the opinion on the financial statement. The opinion is unmodified, which is a clean audit. That's the highest you can get. So good results there. There is no findings. That's good. We also issue another report on the government auditing standard, and that's specific to internal control. It discuss about the city's process and the ability to handle federal funding and governmental funding, no abuse of money, no excessive waste or anything like that. So there was no any material weaknesses, no significant deficiency, and no non-compliance issue. This year, the city spent less than the threshold for the single audit, which is 750,000 for the federal programs. So there was no federal program testing this year was necessary. There was none. We also issue another letter, which is for the communication. That was the standard letter, just talk about the year in general. There was no modifications to it, and that because there was no unusual transactions and there was no misstatements, there was no any difficulties working with management, and management assisted us with everything we needed this year. So thanks, Nathan and the team here. The city in this year adopted a new accounting standard, GASB 101, which related to compensated absence, and that has been adopted. So the financial statement now reflecting that new standard, which on average for all our other clients we have, it increased the liability for compensated absence on the financial statement, give or take from double to triple. And that's what happened with the city here as well. So it fell in line with everyone else. And again, that increase is just on the paper for the financial statement purposes, but that liability always existed. So there's really no change for the actual money wise. It's just more on the financial statement look. Certain liabilities wasn't noted the same way. And now because of that standard, it has to come up on the books. On the next part here, Cody will crunch with you some more numbers, but overall, good year, really everything similar to last year, no dramatic changes in the financial statements, revenue or expenses or anything. So things are good there. Probably the biggest thing is working with Chad now. It's a big change from last year. So we had some good discussions, and we actually had me at more of our discussions had me add a few more slides in the back. So after Cody crunched some of the numbers, there is a few things I wanted to chat about that Chad and I chatted about, and we thought it would be helpful.
Could you actually go back a slide to the change in assets? Thank you. So yeah, we're gonna have a few slides in a row that look kind of like this tabular format. So it's gonna compare 25 to 24 and show some of the changes there. So I'm just going to highlight some of the larger changes that you'll see on these slides. So the first one you'll see is cash and investments increased 1.3 million. Really what this is due to is just kind of overall revenues exceeding expenditures during the year led to this increase in your cash and investments. The one other one on here that I wanted to point out was capital assets. So you'll see that this number is actually decreasing by 1.5 million. So what this is the city did have additions to their capital assets. It was just there was more depreciation on the already existing assets. So you're kind of recognizing these assets as time goes on. So just more of that happened than actual additions. But there were still, additions into the infrastructure of the city, which is always, good to see. So then if we flip to the next slide, this is going to look at our changes in liabilities. So really the few changes on here that I wanted to highlight, one is that your other liabilities decreased by 200,000. What most of this other liability is your unearned ARPA revenue, so your ARPA funds that you got that would sit in unearned revenue, and as you spend it, you recognize it out of liabilities. So this decrease is just what you've spent during the year. Then the one other one that I wanted to discuss that we're also going to touch on later is the net pension liability that you will see increased by 470,000. So there's a lot of things that kind of play into this number fluctuating from year to year. The biggest factor this year was that the investment performance in the pension portfolio was less than prior year. So it just kind of created this increase in the liability itself. Let's see. Can you go back a slide to net pension at year end? Thank you. Okay. One thing I did want to note as we're looking through these items is that it might be a little different compared to what you're used to seeing during our audit. There's full accrual, modified accrual, various accrual entries to bring it up to what we need to look at for GAAP. So, you know, just as you're looking at these, if they seem a little different than what you might be used to seeing, then just kind of take that into consideration. But what you'll see here is the net position at year end, year over year for the past 5 years. And you'll see that it remained pretty consistent with 23 and 24 and 25. So, you know, no major decreases, no major increases there, just kind of in line with prior year. And then on the next slide, it kind of breaks down that net position into the 3 different buckets that it gets put into. Your largest by far, and this is what we see with many clients, is that it's net investment in capital assets. So this is taking into consideration all of your capital assets and backing out depreciation and related debt. So you'll see this is by far the largest chunk of the net position for the city. There's also a restricted bucket. So these are funds with outside restrictions coming from outside grantors or outside funders. So it has to sit in this restricted bucket. And then you'll also see that there's unrestricted. And you'll see that that's actually below zero, but that's also very normal for our clients. Something to consider with, you know, less than a negative 5 million deficit is that your net pension liability, you know, which is something that gets recognized on the financials, was, you know, it's over 28 million. So if you kind of strip that off and look at the city without this massive liability, you know, this unrestricted would increase, you know, up to almost the level of net investment in capital asset. So it's not unusual to see a small deficit once you kind of factor this information in. On the next slide, we're also presenting net position at year end for your business type funds. So this is your water, sewer, and some of your other smaller business type funds. Very similar to the governmental funds, you'll see that it's pretty much in line with 23 and 24. So really across the board in the city, you're looking at net position kind of remaining similar to the prior few years. On this, we kind of break the net position out in this pie chart. Once again, net investment in capital assets is the bulk of the actual net position. There's a small restricted amount for debt service. And then unrestricted has a 5%. So this one was not a deficit. This one actually was above the 0%. On this next slide, we're looking at governmental activities again. So this is your general fund, some of your, you know, special revenue funds, things like that. Comparing the orange bar, which is revenue, and the blue bar, which is expenses, year over year for the past 5 years. And what you'll see is, you know, similar to some of the other slides we've looked at, 24 and 25 is very similar as far as revenue and expenses go. You know, you can see there's a small gap in between those where your revenues are exceeding your expenses. So, you know, but they're fairly close in line. So, you know, your revenues and expenses are kind of, you know, canceling each other out for the most part. And then we're going to look at the same thing on the business type fund. So water, sewer, and some of your other business type funds. You will see here that the orange and the blue revenue and expenses are pretty much the same amount, similar to 24, but there was a increase compared to 24. And what we can really contribute this to is you're looking at some increased rates, bringing up that revenue. There was also some operating grants that were new this year that we're going to talk about a little later on in the slides. And really, you know, these increased revenues have kind of helped cover the higher wages and some inflationary increases that you would expect year over year on your expenses. So yeah, revenue, expenses raising, but both about the same level. So the next few slides, we're actually just going to look strictly at the general fund, it being, the major fund of the city. This this dot chart is going to look at revenue and expenditures year over year for the past 5 years. Similar to the past couple years, these dots are pretty much moving in tandem as revenues increase, expenditures increase, and you'll see they're actually kind of plateauing 24 to 25. But you're not seeing any really big variances where revenue shoots up, but expenditures don't, and vice versa. So, it's good to see that these numbers are in line, and you're not seeing any kind of really big weird fluctuations that you wouldn't expect. On the next slide, we just wanted to present the property tax revenue, just because it's such a large bulk of the actual revenue of the city. So you can see year over year, really from 2020 to 2025, it's kind of growing about the same every year. So once again, that's good to see that the revenue is not decreasing, and it's kind of seeing this year over year growth to kind of higher revenues can go with the higher expenses that you would see just with inflation as raises are given and everything. And then I'm going to hand it back to Amr for the next few slides.
So like Cody was mentioning, the general fund revenue and expenses, they kind of net together into the general fund balance that stayed about 8, almost 9 million at the end of the year in 2025. And it's been flat for the past few years, increasing, going up from 2020. So just to give a little bit history, and I will cover a little bit this more. Before COVID, almost all governmental entities were running on trying to spend less than what they had in the general fund. They're trying to save up the general fund, building the fund balance as a reserve so they can absorb any economic shock. Then COVID hit, and there was a lot of money came from the federal government. Now that helped almost all cities and counties throughout the country to build some of that saving. They used some of that money and they didn't spend as much in their operations. That money supplemented and helped lift up the financial situation. So after that, everyone ended up with money, and people, some of them were like, we have too much. Now we need to give back some to the citizens. So they started creating some of these programs to spend down their reserve so they can benefit the community. So on the next slide, you will see here some of the percentage of how much is the remaining fund balance accumulated from all the years prior to how much would be 1 year worth of expenses. So 2020, it was 72%, and it keeps going down till 61%. So over the past few years, you're trying to spend some of that excess funds that you had so you can make more economic movement. And that's very traditional for all cities and counties. Now, it have created that question, and almost every client I had the same question, and I know Chad asked me this. So I added the next few slides just to help you explain what is this number. Everyone is looking to know what is the perfect number, and I can't tell you what is the perfect number, but the GFOA, it's a very well-respected organization in the government sector. They recommend that you would have at least 2 months worth of expenses. That's your bare minimum. You can't do lower than this. Anything lower than this is kind of an emergency red flag. For us, we spend So I can kind of give you a little bit more on the next slide. And I'm not going to go into this in detail. We have the slides to think about some of these approaches if you want to implement some of them. But some of the insights that help you determine, do I want to be at the 20% or do I want to be at the 100%? First thing is the predictability and stability of your economy. What is your biggest source of income? Is that income is stable, or is it a lot of federal funding? This year, you guys don't even have federal funding, so you're not relying on something that could be cut, which we have seen a lot of the other cities or counties or even not-for-profit that rely on federal funding. They have been very nervous since the political dynamic change in federal government on the cuts. So that's the first thing you have to think about it. Other thing, any emergencies, risks that could come up. One of the other things you have to consider, do you have another fund that maybe rely on grant, and if those grants don't come, you kind of have to step in to bail it out? A lot of the times, some of the cities would help fund a little bit on the streets fund or some road projects, and they might not have enough money, or they don't have a levy that put money into that fund, so they bail that out from the general fund. So that's another thing to keep in mind. And the last thing is the credit and borrowing impact, and we'll cover this a little bit later. Next slide. This is kind of also another way to rethink the fund balance. It's not really the only source for you to keep yourself in a safe position. There are some other strategies, and we kind of covered some of those in here, which one of those, for example, this year, you have moved from your health insurance plan to be self-insured. Historical claims were lower when you look at the city specifically. So you moved to self-insured, and that was a good move to save some of that cost and make sure you're good. But overall, looking at other types of insurance also as well to make sure that you're covering yourself in case of any emergencies, that you wouldn't have to have a surprise cost that wear out the general fund. So it's good to always look at insurance as a kind of another backbone, like having a stable general fund. On the next slide, we kind of wanted to show you a little bit on the bond rating. That might be not necessarily something on your mind right now, but if you decided to go for a bond or anything that might impact you a lot. For example, we looked at here as an example, Moody, which is one of the large credit rating agency for governmentals. They weighed the health of the fund balance and your liquidity at 30% in the calculation of coming up with a bond rating. So if they would give you the perfect bond rating, which is a AAA, you would want to have enough to pay 35%. So a little bit more than the 20% we're recommending as a minimum, but not quite as high as the 100%. So they want you to have more than 35% so you can get the highest credit rating. And it keeps going down all the way to 15%, and you still can get an A rating with that. So that's something to just keep in mind. The other thing that really makes a huge difference in your financials, and Cody tried kind of to hit on that. Couple of years ago, there was a big accounting standard, probably more than 8 years ago, that pension funding, that whenever the pension plan is not funding, we take that liability and we put it on the books. Even though if the city can't necessarily cut a check and pay that liability to make it go away, but we have to put it in your books. And that's why when you look at some of your fund balance, which is the ending result of the assets, liabilities, revenues, and expenses, you had part that was in deficit, which was Cody talking about. It was deficit 5 million. And that's mostly because that you recognized on your books 28 million in liability. Now, that 28 million comes from that pension plan, which you can't necessarily cut a check and pay it off, and you're not going to expect to pay it off anytime soon. This rolls over years and years until it's paid. And again, the plan has, the way the pension plan works, there's contributions, there is assets, these assets invested in the market, and they make market returns that they pay for the liabilities. And there is an actuarial for the plan that audits this and come up with estimates, how much money they need and the projection for the market change. Now, every year for the past few years, the market has been up and down, and sometimes these are as of 6:30. So by the time we're talking about it, the market could be completely reversed, either the gains or the losses. So for this year, the pension plan is 59.4%, which we're on slide 20. So the pension plan for the city is funded at 59.4%, 40%. And for Michigan State, anything lower than 60%, they would consider it as underfunded. Now, for the past few years, or typically the state would ask you to make a correction plan and how you plan on this. For the past few years, the state has been issuing a waiver for the city here because they thought that they're doing already the right things to bring up this, and they taken certain things to move that in the right direction. So they didn't require the formal plan to be sent to them. But Nathan here, and I'm sure Chad will be continuing to work on that plan that they have already in place and keep trying to work on that number to come back up. But again, it's subject to the investment market and the timing at 6:30, which when we take that snapshot, if it's down that year, that day it's down, it could reverse back the next day. So, but they would monitor that on more direct basis. So these couple of the things that me and Chad were chatting about and thought it would be helpful for you to understand in the financials this year. A few more things, Cody will cover.
Yeah, so just two more slides. So these just kind of look at your operating income on this for wastewater, which is your orange dotted line, and then water, which is your dark blue dotted line. And what you'll see is wastewater is operating on operating income right around break even. You'll see that for 25, water dipped down to around 400,000. But really what this is earlier I referred to some operating grants that were new this year. They were also right around 400,000. So if you factor that in, even though it's not operating income, it's not charges for services and stuff like that, you'd be right around the break-even point as well, because the related expenses are included in operating income. So kind of factoring all that in, wastewater and water, you're operating right around break-even on those. And then you'll see the same thing on the last slide, which is your operating cash flow. Wastewater, you're over 1.5 million. Water, you're seeing that dip down, but really if we factor in that 400,000 back in, then you're pretty much even with where you were last year. So just a few additional things to point out on the operations of your enterprise funds. And that is all the slides. Thank you for your time.
Anyone have questions or anything?
I just have a quick question.
Yeah.
Are we gaining money or losing money? It's pretty simple to me. Are we spending more than we have, or are we in a deficit?
For 2025, it looks like we're making a little bit more than what we're spending, but I believe the plan, you might want to be spending a little bit down. So the reserve is going down, but it's relatively very healthy overall. It's at 67% for 1 year worth of expenses. So the city is in a very healthy financial position right now, and it's going to be up to the administration and the board as they're working on their budget. Do they want to spend some of that reserve or build it up or keep it the same level, which is going to be based on some of these metrics that I shared with you to think about that discussion to see if you want to spend your reserve. And I don't know if Chad, do you want to chime in on that?
I think it'd be helpful if you could explain, Amir, the role of government, just from the respects of should we be a bank and banking the taxpayer money? That's another way probably to explain that 20 to 100% perspective. And spending down is one way to say it, but maybe for the general audience or this commission, can you explain the role of government, at least from your perspective as an auditor? I believe you have a number of communities that you do this work for, so.
Yeah, so
could we, excuse me, can I interrupt for one question? Could we get slide 15 up
to address that? Because that does show over the last 4 years, our spend down from 72% fund balance to last year with 61% fund balance kind of addresses what City Administrator Baugh was saying.
Yeah, so when that our recommendation that you would want to keep a reserve between 20% to 100%. The reason we don't want you to go over 100% because the question comes in why you're holding the money and why you're still running taxes, why you're making the constituents continue to pay when you're funded almost over a year worth of expenses that you don't need that revenue. So the argument you don't want to be over 100% because then you're holding on too much cash and people are still paying taxes. Going below 20% puts the city at a risk that if there is something happen and the city has to pay for, you're going to have to go back and issue an emergency taxes, which would hurt the citizens by paying out of pocket a surprise bill. If there's by law, for example, every city should have some sort of a health department running certain operations. If another crisis came and you don't have the money to fund that operation to cover the emergency situation, you're going to have to immediately issue taxes, and that takes a long time. And people will have to pay for this. So you can put the citizen in a very bad situation. So you want to make sure you don't have too much that you're asking them for money while you have it. You don't want to be a rich government and poor citizens. And at the same time, you don't want to be poor government and keep surprising the constituents with taxes or surprises funding. Does that help?
Perfect for me. I do have a question. So on slide 16, you indicate here the number is 16.67%, but verbally you've been saying the 20%. So is that the difference between your firm suggesting 20% and the GFOA suggesting 16.6, or we're just trying to figure out the discrepancy?
Yes, so the GFOA recommended 2 months out of the 12. So that equates to that 16.67. Overall, we felt that 20%, if you're going to take it as a percentage, the reason for that, that the comment 2 months is very confusing because for government, it's very seasonal. You might, for the months that you collect that real estate taxes, you're shooting up in revenue. If you're not having expenses, like in winter, you would have a lot more expenses. So which months are you taking your budget? Is it you're going to take the most highest expenses 2 months or your lowest? So I don't like the number of months because no one really in operation knows how to apply it. So we go with a percentage, and the 16.7, it's just very low when you take it in that. So we stuck with 20% as your bare minimum. Anything lower than 20%, you're in a very significant risk position. You don't want to be below 20%. We want you to be higher than the 20%, which right now you're at 60%. So we consider that is very reasonable. You want to be in between the 20% and the 100%. We feel that this is an easier number. You look at the financial statements, general fund spending last year, take 20%, you know exactly what that 20% look like, but it's really hard to figure out that 2 months, which months.
Gotcha. So our takeaway is that our revenue is 15.09 million in fund balance. And then when we look at those varying degrees of if we maintain at least 20% fund balance, that would be roughly 3 million. And if we wanted to maintain 30% fund balance to hit the Moody's rating, we would at least 30% would be 4.5 million in fund balance. And we're well above both of those at this point.
Yes, but you're skipping a part of my slides as well. It don't focus only on the numbers and the percentages. It's not an easy cut like that. The other slides I talked about, you have to think of the stability of your revenue, stability of your expenses, what other funds that may have a need that the general fund bail out. They might have not needed this year, but would they need it next year? Things like that. You have to consider all these other factors. You have to consider your insurance. all your insurances, cybersecurity insurance. If there is, if you got hacked and you have to pay ransom, are you gonna pay it? Are you not? Do you have insurance to cover that, or do you want to save that in your general fund as a insurance policy, or do you want to pay every month, every year, a premium, pretty hefty premium to insure that? So there is other factors. So don't get stuck only on the percentages.
Right.
They kind of nice benchmark, but there is a lot of thinking outside the percentage.
Which is also good feedback to say, okay, don't hit 30%. And then, now we have this refund or,
Yeah. So if you have, let's say, perfect insurance in everything, you feel like your premiums are really good, your insurance's coverage is really high, you don't have any unexpected events, you're not, all your other funds are very well covered. I mean, we're talking here only about the general fund stability. We don't know what all the other funds, all the other funds are self-sufficient, they got everything figured out. If this is all in the right track, then 35% is the minimum that gets you the AAA rating. You're good there. But if not everything and perfect, you probably want to go over the 35%.
Gotcha. One other question. So this is on page 64, which is in the thicker packet, not the slide presentation. So this specifically relates to the net pension liability. So when I look at the bottom here, we see that as a city, we have within the last 5 years have been funded at the highest of 67.27%. And the last 3 years, we've been below that 60% mark. Can you share with us what other cities are doing? And is this reflective of a general average in cities that you work with, or where do we fall?
So this number is really all over the place. With
Mhm.
every city, it's very different and depend on the plan, how many members in the plan. This is one of the things you can't really compare to anything else. The reason for these trends is the market, really, the stock market and how it's operating from year to year. So you can see here the kind of the trending in these. And one of the things that once you have a loss in the stock market, and you still have to pay those retirees their check, and then you're selling assets at a really low rate compared to like if you have your own retirement plan. If you don't spend it, it will come back and ride the wave. But when you have obligations that you're always buying, recovering from a loss takes longer. So it's coming back up. It dropped down in 2022 at its lowest standpoint, but it's coming back up, and I believe Nathan probably would talk about this a lot better than me because they taken certain actions that they want to come in, Nathan and shit on that. But he has taken more actions and things to help build that percentage up. But
Yeah, so good evening.
Good evening.
As you all are aware, there's been changes made to the pension plan. It's closed to all divisions, so there's no new hires are going in. They've bridged down the multiplier. And I should share the MERS actuary with you actually shows how we're coming down and then we're flattening out and then it'll start to come back up based on what they're projecting. So I think we're doing the right things. It's just going to take time for it to get into that upward trend. So
Okay, thank you. Just wanted you to say that out loud so we could all hear that information.
Yep.
I have a question.
Yeah.
So Nathan, with what you've done in the last few years, and how many years do you think it's going to take the city of Adrian to be compliant with our pension liability?
You mean fully funded 100% or?
Well, what's the current ranking first? I know it's not 100%. Most cities don't do 100%, do they? What is it? 80%, 90%?
They're all over the place. Yeah, like he said, cities are all over the board. There's some that are severely underfunded. We're probably right in the middle there, and then there's some that are pretty close to fully funded. And
If I would add, in the state of Michigan, most of the city's pension plan was very low. I think significant number were about the 40%. I believe when ARPA money came in, the state dedicated some of their COVID money to give away to number of the cities to help raise up this number. Unfortunately, that was one of those years that City of Adrian hit right over the 60%, so you were not eligible for this, but almost everyone was under the 60%, got a few millions to help boost their assets. So that's normal in the state here, and the state knows about this and trying to help whenever they get excess grants or other things. And they're working with Nathan on taking these actions that he's already taken. So I don't know if there's an easy way, and I don't think anyone can predict what is going to happen with the plan and the stock market. I mean, if the stock market continues to be strong, you might recover in a few years. If it didn't, did it?
Would you say the deficit is caused by lack of return on investment or the lack of putting money into the account?
Probably mirrors the question.
investment for sure. And the city, we're meeting the actuarial defined contribution, so we're paying what the actuary says we should pay each year. You could put additional contributions in. That would be a commission discussion. And that may help too, but we're meeting all the requirements of what they say we need to pay each year.
This actuary, has they been doing the same thing for the city for the last 10, 15 years, or is this a new actuary that we're using?
MERS uses their own actuary, and they change them up every 10 years or something. So
It's a state plan. So the state of Michigan
The
owns a
yeah.
plan, and all the cities and counties are under this plan, which helps save cost from administration. But the city, the state, they hire their own actuarial, and they would tell Nathan, here is how much you're going to contribute that year on behalf of every employee.
So this is technically a state issue then, instead of a city issue, how we invest our.
It's a MERS. It's MERS.
Well, this is a state issue then? How do we invest our money?
MERS is the Michigan, Michigan retirement.
Municipal Employee Retirement System of Michigan.
Thank you very much.
Yes.
I think to clarify, it's a nonprofit in the state of Michigan, correct?
MERS, yes.
Any other questions from commissioners?
No, I think just a great takeaway that we're paying what the MERS actuary is telling us to provide in additional contributions if we need to above and beyond. So that's the guidance from MERS to Nathan and to the city. So that is a good takeaway. Appreciate
Yeah,
that.
and I think we just right now, right on the threshold, 1 year we're above, 1 year we're under. I think at this point, we just wait it out and see what the returns come in and what more guidance the state plan will provide us more information if we needed to step in or not. But at this point, we're right on the threshold we need to be.
Thank you, Amir. Appreciate you and your team.
Thank you.
Thanks, Nathan.
you.
Our next educational topic is website updates.
Thank you, Mayor Pro Tem. If you would, we have Michelle Dewey. She's here tonight, and she's been working hand in hand with our vendor that's been handling our website. And she has some updates that she can offer everyone in the city as it relates to what we can do within the budget. And I turn over the mic to Michelle. She's seated to my right, your left, over there. And I'll turn it over to you, Michelle.
Yeah, so I just wanted to give you all a quick overview of some updates that we'd like to do with our website vendor. We've been talking to Revise. In particular, we're due for a redesign, which is free for the city with our contract. And these are some of the main points of what we'd like to do. I'd like to update our calendar module, change our quick links on our homepage. And then we'd like to update the focused items that are on our homepage. We'd also like to incorporate some cleaner navigation. Currently, the site, our site map there's a lot. So we want to break that down a little bit so it's easier to navigate. We'd like to do some content migration to a new, same site, but a new rebuilt site. And again, reorganize our site map. And then we'd like to move all of our departments to online forms. Most of them are already there. We just got to move a couple over. And then the biggest feature would be to add an AI search bar to our homepage. So this is kind of an example of what our website looks like now on a mobile device and the different ways that we could change it so it's a little bit easier to use. One of the things that our website developer told us is the way we have it set up now with the buttons, you have to kind of scroll through those. And a lot of people just don't really like to do that. So with the stacked items, it'd be kind of forcing people to see all of those. One of the things I hear a lot is that people, don't know where these things are. So even though they're on our quick links, if they're not clicking through these buttons, they're not going to see them. So the hope is to have these stacked items and they'll be a little more obvious. So another item would be an updated calendar module. Currently, we don't have, you can only see a few items at a time. So with a version like this, you'd be able to see the entire month right on the home screen and the upcoming events. And you'd also be able to have separate tabs. So we could have a tab for meetings, events, community items. And then finally, our AI search bar. This would be right in the middle of the home screen. Key to this would be, so the key to this would be the fact that it automatically retrains itself every month, but we can also manually train it. We'll have analytics, so we'll be able to see what it's doing on the back end. We'll be able to see what people are searching for and what the answers are. So if we don't like the answer that the AI system is giving, then we can change it. Now I want to go back to the cost. So currently we pay about $5,500 a year, or I'm sorry, yes, a year. The AI feature would be $3,400. So our total annual cost would go up by $3,400 for that. The redesign is free, but doing the migration and some of the updates would cost about $5,000, but that would be a one-time cost. And I've talked to them. The proposed contract would be for 5 years to lock in pricing for that total annual cost of $8,900. However, they're willing to do 3 years, or they're willing to also do a 5-year commitment with a 1-year opt-out. So if we decided that we didn't like the AI feature, then we could go back and opt out after 1 year. Any questions about any of that?
I have a question related to the calendar. So I know right now we do not go very far out with the calendar. If we or when we move forward with this, will we plan out a year in advance? How will that relate? Because I think, we're approving a year's worth of city commission meetings tonight, hopefully. I would think that we would want our public to know all those dates and have those all on our calendar and as much information as we know on the calendar as far out as possible.
Yeah, right now we typically do a month to 2 months. We can definitely put those all in. Commission meetings usually stay the same. Some of our other boards change a little more frequently. But yeah, we can put all of our regular board meetings in there.
Just think on that front.
The calendars,
Any additional communication we can do to over communicate for those items to help members of the community. Maybe the county commission would look at our December calendar and not schedule the tree lighting on the same night next year.
Just a question, Michelle. The calendar, it is quite fluid and it'll change. And I was asking, what about the events on the calendar? Would those be just city-sponsored events?
Right now, that's what's on the calendar for the most part. We can open it up to more community events. I would want to have some guidance, I guess, from the commission as to what those what would qualify as an event that would go on that calendar.
Because I think sometimes that can cause some issues if we're announcing events for one group and another group comes in and wants to put their calendar and they're going to use that as the reason
I agree.
that you've done it, that could be detrimental to the city.
If there's not any other questions, then we'll have an agreement for you to look at next week after, or next meeting after Bert takes a look at it too.
Is there any suggestion from your end related to the AI component?
Yeah, I think AI is, it can be good and bad, but I think it's a very useful tool if it's used correctly. I like the fact that we can go in on the back end and retrain it if we don't like the answers it's giving. I also like that we can see what people are asking because that gives us a better idea of what types of things we need to have front and center on the website when we can see what people are looking for.
Do you need direction from us on whether you would like, you would like the 3-year, 5-year, or 5-year with the 1-year opt-out?
That would be great.
How long have we been with this company?
Since the end of 2020, I believe.
Yeah, I was gonna say, no, it hasn't been too terribly long, and they've been pretty responsive.
They have. We've had a few bumps, but for the most part, they've been pretty easy to work with.
So in your 5 years of working with them, would you like to, since you've been the one working with them as our marketing director, is 5 years good? What would be your preference?
I personally like the 5 years with the 1-year opt-out only because if we use AI for a year and we decide it's not for us or we don't like how it works, I like the ability to opt out of that after a year.
That makes sense. Me.
Does that mean, if we say 5 years with a 1-year opt-out, does that mean we're paying for 4 years?
No, if I understood correctly, we're going to pay for 5 years to revise the company each year we'll pay this much and we'll pay 1 year for the AI service, the $3,400. Is that correct?
Correct.
And then we can decide after that first year if we want to continue for the next 4 years paying for the AI,
Thank you. That explains a lot and is great.
which I think is the most sense. Let's try it out for a year. And if we like it, then we just redo the contract and add it back in the next 4 years.
Okay, great. Thank you.
Okay, moving on to our next educational topic, an RFP for Planning and Zoning Administration.
Again, thank you. We have one of our leaders in our organization, Lisa Hewitt Cruz, if you would come up. And what we want to discuss tonight is a contract for the position that we have not filled to date. So if you would explain how this would work if we put this in front of the commission.
Sure. Good evening. Several months ago, as you know, our zoning planning and administrator resigned from their position. And since then, we have basically covered the day-to-day operations of the zoning planning department. Dan Black has filled in for us on that, doing a phenomenal job. Things have slowed down a little bit with fences and swimming pools and garages and porches. So we're very thankful for that being that time of year. However, we do anticipate things picking up, and we haven't had a planning zoning meeting for the last couple months. But there are several things we do anticipate having on the agenda for the January 6th, I believe it is, meeting for planning zoning, including discussion on adjustments for the newly adopted zoning ordinance in September of this year. So moving forward, we do plan to utilize a third-party contracted service primarily for site plan reviews, future land use planning, and potentially the master or comprehensive plan, as we call it, is due for renewal in 2026. So we did ask for that in the RFP that we've drafted. And the contractor that would be chosen will also attend the meetings along with Dan or myself. Will always be at those planning zoning meetings to represent the city and answer any questions that might come up. So we do anticipate releasing the RFP this week through our purchasing department with a 2-week turnaround time for responses. And so we would hope that we'll be able to announce and talk more about that at the January either city commission meeting or the zoning planning meeting. Any questions?
Sorry, do many communities use a contractor like this? Or is this unusual? I don't know.
I can't answer that question, but I would have to guess due to the cost that they do contract out those services. And I have run the numbers on this particular item to determine it would be in our best financial interest for the citizens to contract out for those services. So that's how I base my decision, not on the other communities, but on our own community.
But you believe that there would be a cost benefit to the
Correct.
city?
Significant cost benefit to the city, yes.
Thank you, Lisa.
You're welcome.
Lisa, I'd just like to commend you on the great work you're doing, and I hope you keep it up. And I really appreciate all your efforts and communication with everybody.
Thank you, Commissioner. I appreciate those kind words. Thank you.
Lisa, so just to clarify what I am pretty certain you're saying is there was a salary that was given to the person in the previous position. And then there's fees that are charged that generate revenue to the city. And the difference between that salary and the fees that are charged were somewhat substantial.
Correct. Based
And
on historical data of invoices I pulled from the previous 12 months to make that determination.
And based on that, what you're seeing is we would go to the third party person to contract them. Are you foreseeing that this would be a break even piece or it would just reduce the gap that it previously existed?
Significantly reduce the gap.
Okay. All right. Thank you.
You're welcome.
I do think I can answer the question of Pro Tem Mayor. From what I've seen, there's a mix for communities this size of having one in-house or contracting out. So.
Okay, thank you.
Thank you.
Thanks. Those are all the scheduled informational discussion topics. Do any commissioners have any other informational discussion topics they'd like to bring up? All right, moving on. I will entertain a motion for to approve the consent agenda.
So moved.
Second.
We have a motion from Commissioner Banky with a second from Commissioner Cheshire. Roll call, please.
Commissioner Zeig,
Yes.
Commissioner Banky,
Yes.
Commissioner Moore,
Yes.
Commissioner Schwartz,
Yes.
Commissioner Chesser,
Yes.
Commissioner Roberts.
Yes.
Motion carried.
Moving on to our regular agenda, we have R25. Gotta actually read this, put my glasses on. We have R25-068 from Finance Resolution to approve the fiscal year 2024-2025 audited financial statements and authorization of year-end encumbrances and carry forwards, as well as designations of the general fund balance. Do I have a motion?
So moved.
Second.
I have a motion from Commissioner Banky with a second from Commissioner Cheshire. Roll call, please.
Commissioner Banky,
Yes.
Commissioner Moore,
Yes.
Commissioner Schwartz,
Yes.
Commissioner Chesser.
Yes.
Commissioner Roberts.
Yes.
Commissioner Zeig.
Yes.
Motion carried.
R25-069 from the City Commission, resolution to approve the 2026 meeting schedule for the Adrian City Commission. Do I have a motion?
So moved.
Support.
I have a motion from Commissioner Zeig with a second from Commissioner Banky. Roll call, please.
Commissioner Moore,
Yes.
Commissioner Schwartz.
Yes.
Commissioner Chesser.
Yes.
Commissioner Roberts.
Yes.
Commissioner Zeig.
Yes.
Commissioner Banky.
Yes.
Motion carried.
R25-070 from Administration, resolution to appoint an interim Parks and Recreation Director. Do I have a motion?
So moved.
Support.
I realize I have not been asking for discussion. If there is any, please chime in when, when it's appropriate. Sorry about that.
I do have a question, not related to Matt's fitness for this, but the job posting, can you give us an update in terms of will the position be updated from what it previously was, or will you review it and give some guidance on any changes for the commission, and then your expected timeline for when it would be posted?
Certainly, it's actually for both positions, but with Matt's interim appointment, the goal is to make sure that this does not last longer than 90 days. Within the first month, we're fortunate enough to know Matt has held this position in another format before, so I'm looking for some guidance of what he sees the best direction for our city. And in the back of all this, there's some considerations about how we look as a recreation department, including hoping within that 90 days, working with our commission to understand what we're going to do with the pool. And that could change a little bit of what that job description looks like over the next 20 years specifically. But over the next 90 days, I'm looking for some feedback about day-to-day operations, and I'll provide that back to the commission after the first month. What Matt sees, then within that first 60 to 90 days, I see a job posting coming out. But I'm trying to keep the eyes wide open going into this and not have a bias of what this looks like after 3 months.
And question, and if you're not in a position that you've made a decision or leaned this way, please let me know. Involving recreational community type groups as part of the interview process. So I'm thinking the rec director from APS, the athletic director from APS, those people. Would you foresee involvement with them, or maybe Superintendent Parker as part of that, or would you want some more time to think about who would make up that interview committee with you?
A little bit of both, because I think it's important to take the time to look at it. But when you do an interview process, you need subject matter experts in the room. They've held it mostly with your partners, to your point, because we have this partnership with APS, but also looking for those that have held these positions in similar communities outside this area.
Great, thank you.
So I have a motion from Commissioner Cheshire with a second from Commissioner Banky. Roll call, please.
Commissioner Schwartz,
Yes.
Commissioner Cheshire,
Yes.
Commissioner Roberts.
Yes.
Commissioner Zeik,
Yes.
Commissioner Banky,
Yes.
Commissioner Moore.
Yes.
Motion carried.
R 25-071 Administration, resolution to appoint an acting fire chief. Do I have a motion?
You have a motion.
Support.
Any discussion? I have a motion from Commissioner Moore with a second from Commissioner Zeik. Roll call, please.
Commissioner Cheshire,
Yes.
Commissioner Roberts,
Yes.
Commissioner Zeik,
Yes.
Commissioner Banky.
Yes.
Commissioner Moore,
Yes.
Commissioner Schwartz.
Yes.
Motion carried.
R 25-072 from City Commission, resolution to establish an enhancement grant ad hoc subcommittee. Do I have a motion?
So moved.
Support.
Any discussion?
When looking at the composition of the, sorry, I had a little anesthesia in my mind. So looking at the composition of the group, I noticed there's only one citizen on it. And it's my understanding that with this enhancement grant that the final say is not necessarily the city's final say. We have to make recommendations, and then Lenawee Now approves any of the recommendations that we make. Is that what I'm understanding, or am I off?
Yeah. One of the things we're doing now, Burke and I are having that discussion now. Pat Farber from Lenawee Now is looking back at the original agreement is very important. Looking back at the original agreement, as we move forward with the rest of the funds to ensure we're not only compliant with the original agreement, and we're also looking for feedback from the MEDC, who hasn't contacted us back after a number of calls. Just for transparency's sake, we're trying to be very intentional in our actions and working with the state of Michigan, working with Lenawee now to understand the rules and the guidelines for the subcommittee and their role. But we do know one thing, that the $15 million wouldn't not exist if we weren't a city. So the money is being received on behalf of our city. And I think the subcommittee will have a prominent role in deciding the direction. But to answer your question directly, we're going to solidify who is the ultimate decision maker. And that will come with the full audit, which I'm waiting for still. And I have a meeting Thursday with the auditors you saw tonight and our forensic auditor to solidify some questions around reporting. Pat and myself and Burke, once we convene and speak with MEDC, we'll very much understand the direction of who's the ultimate shot caller when it comes to the rest of the money.
Thank you. I appreciate that.
Commissioner Schwartz, I have a question for you. So your concern was about the one individual on that committee. Were you suggesting that there be more residents from the city of Adrian?
I was hoping there would be more than just one citizen on that committee. I think that that grant is significant and it has a significant impact on the citizens. I know that the group before that was meeting had maybe over 10 members on it, and they had several citizens that were part of that group.
That was one of the things that stood out to me as well when I looked at the composition of that, and it was my hope that there could be more than one. And also, I think a little bit in the sense that there were citizens that were working on that committee, and there could be some continuity from that previous group for them to bring forward. So we're not doing a overall rewrite. So I would support increasing that number at least more than one. And I don't know if Lisa wants to weigh in on that, being the person that oversees that, or if Chad has any input with that as well.
From my standpoint, I definitely could support as many of this as this commission feels is important. We just met with 4 citizens at 2:30 today. They're very much, I should say, very likely to come to these meetings that will be open if it's approved by this commission. If it's the will of this commission to have these meetings public, which I believe it is. I would, just being able to control and control a meeting for, less than 2 to 3 hours. I wouldn't have more than, I don't know what the highest number could be, but I wouldn't have more than 5 or so.
And just one other point here is that the composition, the number of individuals on that committee is 10, I believe, if my memory serves me correctly. And while I would hope that consensus building would lean us towards decisions that are made unanimously, if you do need a tiebreaker, it's good to have an odd number of people on the committee to help tip that number to a majority, assuming everyone's present. So I would support at least 2 people on that committee. I don't know what others have to say.
I would support 2 citizens to give us an odd number in case there was a decision that was split in half.
So is that an amendment to our resolution?
Yes, someone would need to motion for an amendment to the resolution in a second.
I move to amend the resolution to 11 people with 2 citizens.
I'll support that.
How you vote on the amendment.
Okay, so with that resolution, we are going to amend resolution R 25-072 to establish the enhancement grad ad hoc subcommittee and amend it from 10 to 11 with one more additional city resident.
Now, you are voting only on whether to add 2 citizens,
Okay,
and then you'll do another vote for the resolution.
okay.
So the first vote's the amendment, second vote is the resolution.
All right, so we are voting to do the amendment to the resolution. And that's coming from Commissioner Schwartz with a second from Commissioner Banky. Roll call, please.
Commissioner Zeig,
Yes.
Commissioner Banky.
Yes.
Commissioner Moore,
Yes.
Commissioner Schwartz,
Yes.
Commissioner Chesser.
Yes.
Commissioner Roberts.
Yes.
Motion carried.
Now we are voting on the actual resolution. We have a motion from Commissioner Banky with a second from Commissioner Cheshire. Roll call, please.
Commissioner Roberts,
Yes.
Commissioner Zeig,
Yes.
Commissioner Banky.
Yes.
Commissioner Moore,
Yes.
Commissioner Schwartz,
Yes.
Commissioner Chesser.
Yes.
Motion carried.
All right, it is now time for public comment. Please keep in mind that this is 3 minutes, and please state your city or area of residence. We'll begin with in-house comment.
I have a question before we go down that road. So we have identified that we would like 3 commissioners as part of this, but we have not named the commissioners. Does that go through the process of the mayor making appointments for those 3 commissioners to that ad hoc subcommittee, or does this body make that decision?
Generally, the mayor appoints and the commission approves.
Okay,
So it's still the decision of the commission, but it does first come from the mayor.
Okay, so that would be the expectation then for individuals from this body, if they would like to be on that, to notify the mayor, and then at a future meeting, we would approve those appointments.
Yes.
Right, just making it verbal.
Okay, back to public comment. If anyone would like to speak, will you have 3 minutes, and please state your city of residence.
Jacob Cooper, City of Adrian. Thank you guys again. Spoke to you last week regarding the tunnel. Wanted to thank Administrator Baugh for his prompt communication with me in assuring that there would be no tunnel construction until this commission took it to a vote. Just want to expand that request, and as we hear conversations about who's responsible for the money or who has control of the money, again, asking this body to have a public meeting to gauge public input. The tunnel is a great project in theory, but I think there's a lot of concerns. And I think that between the city and Lenawee now, it's owed to this community to have a public meeting and hear that feedback in an appropriate manner. Thank you.
Keith Miller, City of Adrian. I read today at the Lenawee Voice that Sam Buford, or whatever, Bumar or whatever, bought some property on Hamilton and Forester Road for their university or woodworking shop or whatever you want to call it. But I recall, didn't we sell him property for that, the City of Adrian? And if he's not using that property, is there a clause where we can get that back? I mean, there's no sense of him, that institution profiting off in our property when he's bought property off in Hamilton Road and Forester Road. And as far as I'm concerned, I don't think we had to give another nonprofit organization another parcel of land here, because we are just about tax poor on property taxes. For the amount of people that are here and the amount of property taxes that get paid and the amount of property taxes that get that aren't collected from nonprofit organizations. We need to draw the line someplace. And if we can give that property back, we can sell that. I mean, we sold it once, we can sell it again. You know, even if we give somebody else the same deal we give them, you know, for the 4 acres of land that he got, I guess it was, and the 18 acres or 6 acres of land and 18 acres of woods, you know, I'm sure somebody would buy it at that price. We get our money back. Thank you.
Is there any online public comment? Hearing no more public comment, we will move on to commissioner comments.
I have just a few comments I just want people to know, yes, I'm going to have another heart surgery Thursday. So I will not be at the meeting on Monday. But this surgery is supposed to be good and I'll be home Saturday or Sunday from the hospital and be able to make it back to our regularly scheduled meeting in December. And I just get the rumors out. They say they can do it. I'm Cleveland Clinic. I'm very happy with the doctors down there and they're going to take care of me again.
Not to be outdone by Commissioner Schwartz, a lot of people may not be aware, I'll be having open heart surgery too on this Wednesday. So it seems that this side of the bench is kind of. I don't know.
You didn't have
Yep.
a problem until you said next to
I know. So I'll.
Thank you both for letting us know, and we keep you in our prayers.
I do have one comment. Best of luck to both my commissioners down there. Mine was in May, so it's part of the team. The upcoming holiday season. So we do have Toys for Tots collection at MIS. It's a really great opportunity for our community. If you donate a toy at MIS Saturday between 9 and 12, you get to take a lap free around the MIS track. So pretty cool opportunity to help out on that front. Different organization, but same great cause of making sure that kids have a wonderful Christmas and holiday. Toys for Lenawee will be collecting at the Midas on the corner of Beecher and Main Street as well. So opportunities to help out. 10% of all children in Lenawee County receive their toys from Toys for Tots. So there's definitely a need. And that's all I have. Thank you.
I wanted to just touch base on something from our last meeting. I think it's very important that the public hears clearly that our commission work is grounded in community service, not in specific agendas. So I just wanted to reaffirm that I ran for this office to serve every resident in Adrian, regardless of political affiliation. Endorsements during a campaign do not change the nonpartisan responsibilities we all agreed to uphold. The reinstatement of the Human Relations Commission was not politically directed or endorsed by any political party. The decision to keep the Human Relations Commission was made by a prior commission based on community needs and the body's previous discussions, not a partisan influence. My only goals are unity, professionalism, and ensuring that every resident feels safe and safe engaging with their government. Thank you.
I have a couple of announcements. Greater Lenawee Chamber of Commerce has a Women in Leadership event coming up on March 13th. I think there's some women in the audience that might be interested, and I have postcards up here. You're welcome to take one. Registration opens January 5th. Sister Attracta Kelly from the Adrian Dominican Sisters is giving an update on immigration in the United States next, I believe it's Wednesday or Thursday, December 10th at 6 p.m. at the Weber Center. Hopefully some people who might be interested can attend. Don't forget that next Monday at 6 p.m. is our Crimson Holdings meeting on December 8th at the Align Center. All are welcome. We hope for it to be a good conversation with our community from the east side, and look forward to hearing your direction and what you would like done with those funds. I will briefly address Mr. Miller's comments about the Sam Buford Woodworking Institute. We have a contract to sign that, but it has not been completed. So he does not technically own that land. So it is not that we have to get it back. We will have to work through some legal processes. But have no fear, he does not technically own that land from the city at this time. I'm not sure all the technical wording for all of that, but it'll be all right. We'll work it out with him. And we're thrilled. We're thrilled. I know I am that Sam Buford, that Luke Barnett, consider him a friend, has found an ideal spot for his woodworking institute. So that's wonderful. It's great news. So that is all.
Mayor Pro Temp, bravo on the job tonight.
Only forgot one thing, really. So that wasn't too bad. So thank you. I don't have a gavel, so meeting is closed. All in favor, say aye. Oh, sorry. Can I need a motion?
So moved.
Support. I have a motion from Commissioner Cheshire with support from Commissioner Zeig. All in favor?
Aye.
Aye.
Thank you.